Hey everybody, what's going on? It's James here with Crypto Common Sense. And in this video, I want to talk more about what's called low float stocks. I started to talk about this on Friday of last week, showed you guys this, how I could use a scanner to find a certain number of stocks, 4 or 5 stocks typically in a day, and then use the pre-market on those stocks to figure out which one was most likely to pop for a big move that day. And the stock that we looked at in that video on Friday went up like 200 or 300%. I shot another video yesterday, walked through all the stocks in the scanner and walked through the one that popped, but I didn't get done editing it. So I may splice some of that footage into this video. I don't know. I want to do this video and just show you that this works day after day after day. So today there was a handful of stocks pop up on the scanner using the same methods that I talked about on Friday. I went through those. There's only 2 stocks that I was really interested in. One of them was Femto Technologies, and it looked like this. And I had a daily resistance level drawn on this because I wanted to get past that level before I started looking for longs. And so when the market opened, you can see it actually went right to that level and just capitulated. So that was off the table to trade. The other one that popped up was this one. No, wait, this was yesterday's. Sorry. Let me find the one. Oh, I moved it over by my QQQ tab. Okay. So this was the other one that popped up on the scanner that I was watching. This was actually the one that I traded today. I traded this for like the first 30 minutes of the market, and then I went over to the QQQ to finish my trade day. So this was a really, really simple stock. Again, without going into a great amount of detail on my exact strategies, this is not tough, guys. This is very, very simple stuff. You had a range moving sideways after a move up, right? It consolidated, it broke out, it put in this resting candle, this red candlestick, and then go. Now, I actually got 2 really good trades off of this on smaller time frames, but even somebody trading a 5-minute chart, just using some more basic, technical analysis. Again, what if they just said, hey, this is a breakout, this is a pullback, go. Pretty standard, like retail trading strategy. And I say retail trading not as a dig, but like I say that because this is a pretty well-known strategy. People who trade understand that when resistance breaks and then retests, that's often a really great place to look for longs. So somebody did get long through here and, rode this to the top. Huge move. Could they ride it to the top? I don't think so. Me personally, I don't think it's possible for most people to ride that to the top. So I wanted to pull this up because these were the actual trades that I took in that first 30 minutes of trading. So this moved over and I popped this first trade. It was around a $4 entry and I was looking for a move up toward this resistance level. So it ended up being like 4 or 5 R. And then I felt like this was a continuation, pull back off of resistance, still looked strong to me. And so I grabbed the second move. I took a few trades after that. They weren't as good. One of them won 2 R and then I lost 2 trades. And so the last couple of trades, last 3 trades just ended up being basically a wash because I had won 1 and then lost 2. And there may have been another one in there. I think I scalped like 1.3 R, but these are the big ones. These are the ones that are most interesting to people because again, getting it around $4, selling it almost $5. By the way, this is a 15-second chart, not a 5-minute chart. So you're talking about literally in and out in about a minute. And then the second trade, same thing, 15-second chart in around, $4.87 and then out around 565 on that one. So this is a rinse and repeat formula. Okay. And then once I traded that, I was done. You can see this message here. I posted in Discord. I couldn't, for some reason, when I try to screenshot Discord, the timestamps beside the pictures disappear. It's really annoying, but you can see one of my members replied at 9:03. So at this point, I had said, hey, look, I'm done with this, going back to a QQQ. So that was my first half-hour trading. And the reason I was done with it is because it had hit this weekly resistance level up here. It was consolidating sideways. And I viewed this spike up here as a bull trap or an up thrust, which is the opposite of a wick off spring. And I thought like it was, done. And then of course it dumped. So like I said here, important not to overstay our welcome. I get in, I get out, boom, right, and move on. So since I do still have yesterday's charts pulled up, this was the chart yesterday that, Discord members were able to trade. It popped up on the scanners and same thing, right? We put pre-market on there. We'll see that it consolidated, it had a move up, consolidated, had a move up, had a pull back, which is more like a bull flag. So boom, 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 right? And then somebody getting long in the entry, they had an opportunity to ride that up to that resistance level for over 7 R. It's just every day. Now, they don't always win, okay? The last 3 days, for whatever reason, have just been absolute home run days. as far as these momentum stocks go, but they don't always win. Sometimes you lose. And that's why it's important that when you have a winner, that you do ride it, that you do take, take it for all it's worth, basically. But it's also important to understand when to get out. I see a lot of people chasing these things down with no idea of, hey, why did it suddenly turn around? And if you use daily and weekly charts to find areas of supply, you'll typically have a pretty good idea where it's going to stop. Like this one here, this was a daily area of supply period, this white line. Got there, chopped around a bit, and dumped. You look at today's chart that I traded, same thing. Got up here, chopped around and dumped. In fact, here's the Facebook picture right there. Okay. It's a rinse and repeat formula, guys. It really is. And then if we jump over to QQQ, we're going to see the same thing. Okay. So this was a 5-minute setup on QQQ, but I didn't trade the 5-minute setup. I actually zoomed into smaller time frames, and more specifically 30-second charts. I was able to get a 2R here and a 2R over in this area on those smaller time frames. And I told my Discord, look, the reason I'm not trying to ride this for the full target on the 5-minute chart is because I think this is probably going to end up being a double bottom. And I don't think it's going to quite get there. So it didn't, right? I missed it by a few cents if I'd been trying to go for that 5-minute chart. But using those smaller time frames, I was able to get in. I think they're both still on there. Yeah. I was able to get in and out here and here, right? No problem. And what's interesting is if you really pay attention, the market is always leading clues. So for example, right here, this is that 5-minute chart. You can see the smiley face. You might not know what that's referring to, but there was a big tail that's hard to see on this chart right here. There's a big tail that snuck below that level of support and then closed above it, which is most often a spring, right? A wick-off spring or a bear trap, a liquidity sweep, swing failure, all kinds of terms for it. Essentially what it means is it's probably going to move the other way, right? Because retail traders are trained to short this break, whereas institutional traders are using those retail shorts to actually fill their longs. So when I'm trading QQQ is dominated by institutional volume, right? Retail traders don't typically fare well on a QQQ. I'm kind of a weirdo because I like going against the grain and trading against, the best in the world because I think it makes me better. So when I trade this, I have to think like institutions, okay? And then immediately went back up. And the last thing I'll say before I wrap this video up is markets leave clues. Moves in the market should not come as big shocks most of the time. Once in a while, we have some kind of fundamental catalyst that just, wrecks the technical analysis. That does happen. But for anybody freaking out today or wondering like what happened with Bitcoin, nothing about that move was surprising. Nothing at all, right? Bitcoin was retesting its 19-week moving average. This post was from 19 hours ago, right? And in my Discord is at 215 yesterday, which was right here in the chart when Bitcoin was around $94,000. And I told my group, it points to the idea that the time correction is finished and a big move should be incoming, up or down. I couldn't tell whether it was up or down. But when we dug deeper in Discord, one of the things I pointed out was that our moving averages had really started to flatten out. So if you look, for example, at a Bitcoin weekly chart, I actually had this short posted. So this is the post right here in Discord, and you can see that short was already posted up. That short was actually triggered a couple of weeks ago, all right, with a profit target down around $80,000 and a stop loss around $109,000. So that short was already in play from a technical analysis point of view. Now, to be clear, I didn't short it because I can't short it, right? Coinbase doesn't allow me to short. Kraken doesn't allow me to short it, so I can't short Bitcoin. I can go trade futures, but I don't. So I'm not actually in a short on this. It was just something I was displaying in Discord, and my Discord members understood that as well. But my expectation with this was it was probably going to move down. If we look at, what's happening on this weekly chart, it had come up to its 1.618 extension, which is a popular place for markets to kind of pause at the very least. We hadn't really had a big pullback after this breakout back here, so I expected that. And then just overall, the QQQ itself, the NASDAQ was looking pretty rough. If we look at a NASDAQ chart, it looked like it was trapped in a range. And a lot of times when a range hits one side, it'll move, violently toward the other side. So those are my reasons for being more bearish than bullish on it. But here's what I'll say today. If we go over and look at a daily Bitcoin chart, check this out. Put some moving averages on here. We'll put the 50 on there. The 50, again, this is one thing I was saying in Discord, the 50 had started to flatten out, which is always a bit concerning, right? We don't want to see flat 50 moving averages. But before anybody panics, and I'm not saying to go run out and get long or anything, I'm just saying before anybody panics, do keep in mind, Gravitator's been doing a pretty good job on Bitcoin about calling these moves. So that's interesting. But really what I wanted to say was keep in mind that this is all basically a range. And that a lot of times, just like I showed you on the QQQ a few minutes ago, a lot of times you'll have retail shorting this because, well, it's broke support. That's what retail traders are taught. Short it when it breaks support, right? It's breaking out. But a lot of times institutional money will actually use this as a spring. They'll trap retail shorts and use the liquidity to go up. So it's important to watch this, because if this candlestick pumps back up and closes above the bottom of that range and leaves behind a big tail, especially on high volume, it's actually a bullish sign, not a bearish sign. So be aware of that. Also, I don't use RSI for hardly anything, okay? But the one thing RSI is really good for is divergences. This is the first thing it's really good for. But the other thing is, if you're in a bull market and you become oversold, and only in a bull market, guys, does this matter? If you become oversold in a bull market on a larger time frame, it often does mark an area where the market is either going to pause or reverse. So for example, back here, we saw the market come down into oversold in June. It did, pause and move sideways. Here it came down again, and this marked the low before this pump. So, this coming down into oversold territory on high volume like this, high relative volume, and the bottom of a range at the same time that the QQQ, this is the futures here, are coming down toward the bottom of their range, it just kind of feels a little bit sneaky. And so again, I don't actively trade cryptocurrency. When alt season's kicking off, I'll go in there and I'll trade some alts on swing trades. Once in a while, I'll take an occasional swing trade on Bitcoin, but overall, I really don't trade a lot of crypto. I'm just doing this as a courtesy for people that are in crypto. These are some things that I would personally be aware of, right? Be aware that this could be setting up a very large bear trap, or it very well could be that this was distribution and we're about that markdown phase. Anything's possible. So keep those options open. Please remember, I am just some guy sitting in a spare bedroom, which means that nothing in this video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor for making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. This is James with Crypto Common Sense. Remind you, please, to trade and invest safely. I'll see you soon.